Hey traders, Jason here from Lever Brothers. So in this video I'm going to talk about playing the short side with MACD and Stochastic. We've had a great run. The market has acted incredibly well off the early January low. It's the best trading we've had in probably 18 months. And then last week things started to soften on the index level, and for individual stocks some of them felt pretty hard. So if you're relatively new to trading, you probably want to focus on just playing good defense because you've had some nice trades over the last month, and you just want to play good defense and make sure you keep your profits. If you're a little bit more experienced and you are more active and you have the ability, and this is hard, not everyone has the ability to do this, if you have the ability to switch from long to short and then back to long, there were definitely some good shorts to play. So in this video, I'm going to talk through some of those shorts. The purpose of this is just to be educational. It doesn't matter if you're watching this video today, tomorrow, a year from now, 5 years from now. These types of setups happen all the time, and it doesn't matter when you watch the video. It's just purely educational. All right, so let's get into it. In most of the cases, I'm going to show you a daily chart, and then I'm going to zoom in with either the hourly chart or the 2-hour chart to show you a little bit more detail on how I operate. And this exact, a lot of what I'm going to be talking about here is one of the topics I talk about in my masterclass. I talk about what I call my kiss and cross trade. So this is kind of a brief overview of that. All right, let's get to it. All right, so here is HUT. Weak stock, in spring, early winter, bottomed over here underneath $1. Obviously problems, but then it rallied up pretty far, posted big gains. Definitely some tradable moves in there. But then as we got into early February on this last on the last surge there, we got a negative divergence between the stock and its MACD histogram. So what I'm going to do here is let's zoom into this area here to see how you could have played it on an intraday chart. All right, so here is the 60-minute chart, and what I want to highlight is what you have here is you have a move down here, which causes the MAC to cross down. Then you have a counter move back up, but that counter move lacks energy, it lacks force, so the MAC is only able to come back up and kiss its signal line, and the stochastic rotates up to a high level and then rotates down. This is what I call my kiss over here and my cross here. It's my kiss and cross trade. It's that you get a move down, and then you get a counter move against the overall trend, and then you get an attempt to resume the trend, but that attempt fails. It fails with the MACD coming up and kissing and the stochastic crossing, and then you get a resumption of the counter move. And as you can see, what happens, HUT fell quite a bit last week. All right, let's go to the next one. So here's big commerce. A little bit less of a divergence here, but still a divergence nonetheless. Stock pressed higher and higher and higher. So, I mean, if I back up, it's like the stock based for a couple months. It broke out of a base. Everything's looking good. As the stock is going up, it's starting to lose energy. You get a negative divergence here. You get a negative divergence here. So let's zoom into this area here with an intraday chart to see how it could have been played. All right, so here is big commerce. This is the 60-minute chart. So what we have here is we have, we got to move this move up. So we get a decent size move down, which causes the MAC to cross down, the stochastic crosses down. Then you have an attempt to resume the trend, because remember the trend is actually up. So we get a counter move down and then an attempt to resume the overall trend, but that attempt lacks energy, so the MACD comes up and kisses, the stochastic comes up and then rotates back down and crosses, and then you get a continuation of the counter move. The whole idea here is that this first move, let me delete some of this, this first move is an attempt to reverse the trend, and then this move here is a failed attempt to continue the trend, and then you get another move down. And the whole idea is that in this move right here, this move will actually bounce far enough, or it'll last long enough going sideways to allow the MACD to come up and kiss, and to allow the stochastic to rotate all the way back up and then rotate back down, and there you get your cross. All right, let's go to the next one. Here's Bros. All right, so here is the daily chart. You could say that it broke out here. Overall, it was trading in a range, been trading in a range since last fall, moved up nicely here, consolidated for a couple weeks, moved up again, but we have a negative divergence that formed here. A little bit of one here. I don't really consider that much of a negative divergence because we got a really high print here. It's mostly the negative divergence. Two types of negative divergences I look for is one is with the histogram and one is just with the MACD itself. Okay, so we get a negative divergence, which tells me that even though the stock moved up there to a multi-month high, it's starting to run out of energy. So let's zoom into this area here and see how it could have been played. So here's the 60-minute chart. What we have here is we have a move down, a counter move down against the overall trend. The trend is up here. Then we have an attempt to continue the overall trend, but that attempt only enables the MACD to come up here and kiss, and the stochastic rotates from a low level to a high level and turns around and crosses. So there's my kiss here, my cross here, and then the counter move continues. Okay, why do I show this? This could be a great setup for you. Okay, it might work for you. It works on all time frames. It works for me. You know, to be a great trader, you don't have to be a jack of all trades. You don't have to know how to do everything. You just have to be a master of just like one or two setups. So you could focus on just, hey, if I can nail 2 points right here and get really good at that, and over time I increase my size, like I can make a whole living just being really good at just nailing that second move from what I'm talking about here. Okay, you don't need to nail, you know, 1,000% move over the course of several years. You don't need to be really slick at a lot of things. You just need to find some way to carve out a couple points over and over and over from these charts. All right, here is HIMAX. This is the 2-hour chart. So we have obviously an uptrend here. So we have a move down, a counter move down. Then we have an attempt. Well, I should say counter move down crosses the MACD down, crosses the stochastic down. Then we have an attempt to continue the trend, okay, but that attempt, all it does, it doesn't go far enough and it doesn't last long enough. So what happens is the MACD comes up and kisses, the stochastic rotates up to a high level and then rolls over and crosses, and then you get a resumption of the counter move. Let's go to the next one. Here is SDGR. This is the daily chart. Stock put in higher high here. We got a negative divergence there. That tells me this move is running out of a little bit of energy. We've had a nice move from 16 up to the high 20s. Probably needs a little bit of rest, even though we got some good white candles in there. So let's zoom in on that area. So here is the 60-minute chart. What we have here is, so here was that last breakout, looked really, really good. Okay, definitely playable. But then you have a move down, which crosses this, which is no big deal. Okay, that's not the alarm bell that rings, okay? Because by definition, that's gonna cross down. The alarm bell rings when you have a counter move that either goes up or sideways, and it can't go up far enough, it can't go sideways long enough, it doesn't have enough force that the MACD is unable to cross back up. It only goes up and kisses. The stochastic comes up, rotates up, and then crosses back down, and then you have a resumption of the counter move. Let's go to the next one. Here's DocuSign. This is a 2-hour chart of DocuSign. Hopefully this is starting to get a little bit redundant, but that's good because if you want to be a good trader, you have to find, you know, quote unquote, your trade, and then you're going to go out there and you're going to search for hundreds and hundreds of examples, and then you're going to study those over and over and over. So DocuSign kind of broke out over here, not really clean resistance, runs up, looks good. Okay, then it starts backing off, which is perfectly fine. The MACD crosses down, stochastic had already crossed down. Then we get an attempt to rally up and resume the uptrend, but that rally just doesn't go far enough. It doesn't last long enough. It doesn't have enough force. The MACD is unable to cross back up. It just simply kisses there. The stochastic crosses there, and then we get a resumption of the counter move. Okay, and again, you could be a full-time trader just nailing this move over and over and over with, you know, stock after stock after stock. You don't have to be great at everything. You just have to be pretty good at something. All right, last one here is BlackBerry. This is the daily chart. So stock pressed higher here, negative divergence here. We also had the stochastic trending down there. So let's zoom into this area and see what we got. Here is the 2-hour chart. Okay, we get a, stock breaks out over here, looks good, up to a multi-week high here, then starts trending down. The MACD crosses down, no big deal. The stochastic cross down, plus it takes out a support level here, so everything's going down. That's perfectly fine, no problem with that. Then the stock moves sideways, but it doesn't move sideways long enough. It can't move off the 50-day moving average here, so the MACD is unable to cross up. It simply kisses here, it crosses here, and then we get a resumption of the counter move. Okay, so the purpose of this is just to kind of show you how you could trade the short side with MACD and stochastic. This works on the long side and the short side. It works on all different time frames. To be a great trader, to be a full-time trader, you only have to be very good at one setup. Okay, find a setup that works, find something that clicks with your personality, something that you can comfortably execute, then study it, practice it, iterate on it a little bit, get really good at it. And if all you do is just like one simple setup over and over and over, you could be a full-time trader. So hope you got something out of this. Want more information? I have an entire masterclass where I talk about setups and I talk about pretty much trading from A to Z. It's a great resource. It's something that I wish I had access to when I started, which is why I put it together. You can check it out at the link below this video. All right, good luck. I'll see you next time.